Let's take a look at your markets, starting off with the local markets. The JSE received a negative handover from Asia, that not really filtering through to local markets as they've staged somewhat of a recovery today. The all share gaining 0.74%. This mainly being boosted by a jump in the Resources 10 complex, closing over 4% in the green. The Industrial 25 gaining just over 0.33%. The Financial 15 backing the overall trend down just over 0.5%. And for further analysis on those moves, Momentum Securities' Odwa Magwentshu joins us now. Odwa, thanks so much for your time today. So internationally, it's been a bit of a hectic start to the year. Caution prevailing as traders eye, those potential tariffs from Trump. They're also digesting softer than expected labor numbers that we got yesterday, as well as the Fed minutes. Looking at markets, there seems to be some calm today. We also saw U.S. bonds stabilizing after a 4-day sell-off. Is this as a result of thin trading, considering it is a holiday in the U.S. where they are celebrating, or rather they're observing the National Day of Mourning?
Yes, I do believe that may be the case. As you said, the markets in the U.S. are not trading today. However, I think there still might be more to occur in terms of these certain sell-offs. Right now, the key thing that is happening is definitely uncertainty, to say the least. And right now, as you said, yields are going up, which is in contrast with what is expected at this point in time with what interest rates have done. And so, again, it's just a matter of what it's telling you about how people feel about the longevity or the uncertainty which is to come with the Trump presidency.
You'd expect that would be used to this uncertainty, considering that this is the second time Trump is in. But it still seems like, Trump's sending jitters across markets.
100%. The issue is you never know what Trump's going to target next. Right now, he also does seem to be making enemies out of allies. And I think that is the most concerning part of it all. First time around, everyone, it was the first time Trump was coming into play. No one really know what to expect and what kind of rhetoric is going to produce. But this time around, it's there's a bit of, there's BRICS, for example, is on one side. The West, collective West, is much weaker if you look at the European zone. And now is strong holding is closest neighbors, that's Canada and Mexico. So the uncertainty is a bit much more concerning this time around. And he seems to not have his guardrails which he had in his first presidency.
I've been saying we're in for a long 4 years. Now, moving over to monetary policy, those Fed minutes for the December meeting out, policymakers seem to be, concerned about Trump tariffs and immigration policies and the inflationary pressures that it could bring. And so we're seeing the Fed take a more hawkish, more cautious approach when it comes to rate cuts. Some analysts are even pricing in only one rate cut this year. Where's your head at when it comes to monetary policy in the U.S., considering what the environment looks like and the risks still at play?
One could be the right answer right now, but as the Fed minutes said, they are anticipating a maximum of 2 at 50 basis points as a total. And I mean, that's a stark contrast with the last cut being 50 basis points. So if you look at, what that just tells you in terms of what's coming along in the presidency. And that, again, is the reason why there's so much uncertainty right now in the markets. For me, I do think that we could stay in this, high interest rate regime that we're in. And it's all a matter of how things play out with Trump's policies and how quickly he actually implements them. One thing to also consider or think about is Powell's terms actually running out next year as well. So then does he put in a loyalist in next time, or there's also that uncertainty what happens in 2026 and beyond.
Now, looking at what's playing out there in the States, particularly when it comes to monetary policy, surely this could then impact, the SARB's thinking as they prepare to meet later this month, taking everything into account and everything that's happened since our last meeting in November. Do you think Kganyago's tone could possibly shift to a more hawkish one?
I mean, that wouldn't be much of a change from his original tone. He tends to be very
cautious.
Exactly. So I think yes, to a degree, but nothing to scare us as South Africa. I think it's still going to be defensive. It's still going to keep his mandate in front of himself. But I do believe yes, it's going to remain on a hawkish front. There's a lot of uncertainty right now in different economies. China is not picking up as we would like it to pick up. The US economically is performing quite strongly, but again, this could change 180 degrees. So, but in terms of everything, inflation-wise, we are in a very comfortable level right now. And I think even if things do change, we do have some time in preparation for that.
So uncertainty playing out in markets, but there is one stock you're not uncertain about. What's your stock pick, Odwa?
My stock pick today is going to be Purple Group, capitalizing on the volatility when it comes to people getting involved and participating in the markets. That's where they're going to be going, majority-wise. And also they've done a very good comeback when it comes to the latest results in August. I'm very proud of that, and I think that they've established a base, and it's upwards from here.
Odwa, thanks so much for joining us and just taking us through the day's markets action. That was Odwa Magwentshu from Momentum Securities.